Hi, it's Lee and welcome to the Tesla Economist. Just to continue on with Tesla losing market share, we've already covered why Tesla are losing market share in China and the US. In this video, I wanted to talk about Europe. I thought the market share was quite an important topic as it seems to be a motivator of the FUD that we're seeing right now and is being used to demonstrate that people think Tesla's demand is dropping. Now, I can recall back in 2017, we were hearing stories about Tesla's demand dropping then. The Model 3 had been launched, and we were hearing that it was just the initial reservation holders taking their orders. Once that dried up, there's no new demand to follow. Consumers are concerned about spending this much money on a new technology. They're worried about the batteries catching fire, degrading too fast, or having to spend a fortune to replace their battery if there's an issue. Or maybe Tesla won't even survive, and there'll be no aftermarket support for these vehicles if something went wrong. To be honest, these were fair enough assumptions for consumers. We didn't know how it would go. The FUD headlines were strong. There were credible, for lack of a better word, investors shorting the stock big time and have a lot of conviction. But the product spoke for itself. Tesla had managed to get an electric car with a range well in excess of 300 miles at a price point a lot of people could afford. Wow, an electric car, that's the future of auto, but wasn't feasible to offer one to the mass market until it was. With the Model 3, it had been achieved. As an investor, this was a tough time, and the stock price was against you too. You really had to believe to hold on here, and as Elon even told us later on, the company nearly went under. But you were heavily rewarded for keeping the faith and believing in this company. I hadn't even been inside a Tesla at this stage, and was going purely off the numbers, vehicle specifications, and from what Tesla owners were saying. If I had actually bought a Tesla back then, I think my conviction would have been stronger. Since owning the product, it helps dramatically, because they're phenomenal. It looks like we're hearing the same thing again now, and the orders now are just from previous reservation holders. The prices are too high, the economy is going to collapse, there's an energy crisis, the prices of energy will be too expensive to charge cars. Once they complete the back orders, then there won't be any more demand for luxury vehicles after that. Yes, luxury SUVs is a term I hear to describe Tesla's vehicles regularly, and that they're just overpriced. Just a quick comparison of how much a BMW X3 starts in Germany, brand new. It's 53,000 euros, and that's for a 2-litre model with 0 to 100 time of 8.4 seconds. The Model Y is 54,000 euros with a 0 to 100 time of 6.9 seconds. I compare the 0 to 100 time to give an idea of the sort of performance we get, as range is not as relevant. They are the same price. Tesla also estimates that you'll save a further 5,000 euros with the Tesla in fuel savings. I then added to the BMW a few of the extras that come standard in the Tesla, and it quickly raised the price a further 7,000 euros. We're now at a price comparison of 49,000 euros to 60,000 euros. I would say that the Tesla is still a superior vehicle too. Obviously it's safer and handles better due to the battery pack, and no autopilot is ever possible in the BMW, let alone FSD. Then it's a smart car, but we don't need to go all the way down that road. My main point is that the luxury SUV label doesn't seem to align. And what if we go for the Volkswagen equivalent then? I chose the Volkswagen Tiguan, and the equivalent of close to the performance you get with the Model Y started at 41,000 euros with 7.4 seconds to 100. But again, when you add on the extras that come standard, we were in excess of 10,000 euros more. Therefore, the Tesla becomes lower cost than the affordable German brand at its local price. Yes, you can buy the Volkswagen with much lower specs, unlike the Tesla. It's just that as every Tesla comes with all these options, it makes manufacturing much easier and economies of scale. So Tesla can include pretty much a fully optioned vehicle for everyone. Therefore, if demand started to drop, I would say that they're likely to drop for BMW and Volkswagen and Audi and Mercedes and the other legacy autos too. I wouldn't classify this Model Y as a luxury car only the rich can afford. I see them everywhere in my city, and there aren't that many rich people there. Oh, and then there are often local incentives and subsidies for a Tesla in addition to this. The problem for the legacy autos is that they will struggle to cut their prices if demand really does drop. Instead, they have to cut back on supply, or even continue certain models if they get that bad, thus reducing supply and reducing other options over a Tesla. Then there is the fact that Tesla very much can move on price anyway. And Tesla will be able to move on price more soon when Giga Berlin is ramped up, due to no import tariffs from China and minimal transport costs. Possibly a slightly higher production cost though, due to the difference in energy prices and labour from China. But the more Tesla ramp up there, the relatively lower cost production will become too. For me though, the biggest sign that demand is not an issue in Europe is the fact that the waiting lists are still up to 6 months in many nations there. I would have thought that really is enough evidence. It speaks for itself. I don't think it needs further explanation. If these waiting lists started to reduce rapidly, then we might need to review it. But worst case scenario, like I say, Tesla have massive margins and can drop prices. The fact Tesla haven't dropped prices yet is a good sign. But what about this infamous graph that shows Europe was hit the hardest in market share, dropping from about 20% to 10% from Q1 to Q2? That is a loss of half its market share. Now, is that concerning? Well, a reminder for everyone about Q2. It was a nightmare, as China had lockdowns for COVID, and Tesla lost something like 60 to 70,000 units of production. In the graph, however, you can see that Tesla's China market share didn't drop as much, despite other domestic Chinese vehicles ramping up. This means that from the lost production, Tesla decided to pass that on to exports more than domestic sales, namely to Europe. Again, back to the fact that Tesla have import tariffs, shipping costs, logistic issues when exporting from China to Europe. They likely make more profit on domestic sales than European. Therefore, I think for Q3, we will not only see Tesla's European market share return to 20%, but possibly even higher due to additional ramping. There'll also be some contribution from Giga Berlin in Q3 that will help, although the production lines were down for some of the quarter with the line upgrades, so the full impact won't be felt. Q4 will be a lot more telling. I'm assuming that right now they're pushing out a lot of these exports, and I would expect Tesla's market share in Europe to be in excess of 25% in Q4. Therefore, I don't think there is any evidence that Tesla are suffering from demand issues in Europe. The evidence that shows they are losing market share can be explained very easily. I don't think their prices in Europe or even Germany are overly excessive or pricing themselves exclusively to the rich, as some people even say. Even equally equipped, a Model Y is much more of a product than a BMW X3 or Volkswagen Tiguan, and appears to be a lower cost anyway. In the past, you have had to have a little faith in the company and Elon, but there seems to be a lot of data here to support that Tesla sales are still strong enough and that there is enough demand to meet this new level of supply. However, there are also numbers here to create FUD and infer these statistics negatively against Tesla, and it can make for great headlines. Tesla losing market share in their BEV market, the competition outselling Tesla. I'm happy with my analysis. We just have to hope that I haven't been super clever and tried to confirm my own bias. The good thing is I can present all my findings openly and then see what feedback we get. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.